Hey everybody, welcome to Make Money Count. Today, we're going to be talking about a lot of things. The market. It's been a long time since we've done a podcast, so I feel like there's a lot of catching up to do.
We did one 2 weeks ago.
Yeah, feels like, I just feel like we used to do it so much more.
Yeah.
Which I enjoyed. Yeah. So, employment numbers came out today, and the CPI numbers are coming out soon, and everyone wants to know what's going on with rates. So why don't you tell us?
Oh, I thought you were going to do it.
No.
Okay, I actually have a few really cool things.
Okay.
One that I'm super excited to talk about,
Okay.
which is basically the difference between the governor of the Bank of Canada and who will be the new head of the Federal Reserve.
Because the old guy is arrested.
Like they're going to kill him.
Yeah. Lynched in the streets.
Yeah, ICE is going to deport him, even though he's from Wisconsin.
They're going to deport him back to California.
No, they're going to put him in that El Salvador prison.
Right. Yes. Yeah.
So if you're hearing for this for the first time, Jerome Powell, I'm sorry. Apparently, Trump has ideas of putting you in the El Salvadorian prison with Bukele. Okay, so first off, I think we've reached general consensus that under this governor of the Bank of Canada, the prime rate will not go down in 2026, barring something bizarre happening. And even the way that we're getting information interpreted to us right now, for instance, today labor numbers came out, and I found that even in the Statistics Canada report for the unemployment numbers, some of it didn't make sense to me, and I'll explain to you what.
Mm-hmm.
So typically when the unemployment numbers come out, unemployment is affected by two factors. The rate of unemployment is affected by two factors. Well, it's more than two factors, but how the rate is derived is typically influenced by two major factors. One is the number of people who are unemployed, the number of people who are unable to have employment.
Mm-hmm.
And that is determined by the number of jobs that are available for those people, but it's also determined by the number of people who consider themselves to be searching for work.
Right.
In an environment where we have people leaving the country, the number of people looking for work is reducing.
Right.
So the denominator of that percentage is reducing, which causes the number to appear smaller.
Right.
Fewer people are looking for employment. So if there's fewer people looking for employment, then the unemployment rate gets better.
Yeah.
Right? So when I saw that, I read some of the notes from Statistics Canada. So it says the decline in the unemployment rate was reflected across multiple provinces in January. In Ontario, the decline reflected employment losses in manufacturing that were more than offset by a decline in the number of individuals looking for work, particularly among youth between 15 and 24. And that contributed to a drop in the labor participation rate, which is the lowest since January 2021. Then Statistics Canada said that only 0.3% of those not participating in the labor markets were discouraged job seekers. So how is it possible if the largest decline in individuals looking for work is people that are between 15 and 24, and simultaneously none of those people are discouraged? Are they going back to school and just saying that they're not discouraged? Or are all of those people in that new immigrant category that we're pushing back out of the country?
Right.
It didn't make sense to me. And it seems as though, like, youth unemployment is so high, it would stand to reason that that contingent of the labor force would be the most discouraged. And it just doesn't, like, the numbers that I'm seeing don't seem to make sense with the reporting that we're getting from Statistics Canada. But these numbers, as they come out, all guide the public narrative of what's being told to us, right? things aren't that bad.
Right.
All of the other numbers that we've seen so far seem to indicate that things are pretty bad.
Yeah, like things are in the shitter.
Yeah, I mean, consumer confidence is bad. Consumer spending is down. Mortgage arrears are at like 4x what they are normally. Like there's a lot of systemic issues, and how that's like it should be being presented to us a little bit differently. I don't know why it wasn't in that case. We can pull up the bond yields chart. You can see bond yields have kind of been oscillating in this 30 basis point range on the 5-year, like 2.9 to 2.6. And we're kind of in the midpoint there. We're at like closer to the higher end. I think we're at like a 285 now. Again, indicating that we're kind of range bound in those yields, but also telegraphing that the Bank of Canada, that traders don't believe we're going to see any meaningful change with the Bank of Canada.
Right.
And I think we have to see more bad numbers in order to get there. And I'm going to read some quotes from Tiff Macklin in a second. Please stick with me because there's something I really want to get to, and it's a comparison between Tiff and Trump's new pick for the Federal Reserve. And I think you're going to find it really, 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 really interesting. CPI numbers come out on February the 17th. CPI numbers are probably going to be a little more muted now. I know we had a bit of a hot print for December, so we get January's number on February 17th. I think we're probably going to see it lower than December. Again, I think when the CPI number comes up, if you want to trade the bond yields, I think you're going to see yields drop, but not by much, maybe 10 or 15 basis points. But I still don't think that we're going to see a drop in the overnight rate. I don't think the Bank of Canada is going to drop prime. So I think we're going to be living with a 4.45 prime for most of the year.
And why not if everything's in the shitter?
So that's a great question. It's a perfect segue.
Okay, perfect.
So Tiff Macklin spoke in Toronto, and he believes that monetary policy cannot affect meaningful change in an economy other than to stoke inflation if there are structural issues with the economy. So he's saying that there are these structural issues with the economy stemming from protectionism in the United States, AI with the potential to cause inflation, and that's a really, really critical thing. And he believes that Canada needs to make a structural shift to be less reliant on the United States and pivot in order to gain footing and repair itself for the future. And he thinks that dropping interest rates further would just stoke inflation.
Right.
Okay. So he believes that we need to change the economy. That needs to be done by businesses. And he does not think that he should reduce interest rates because it will only cause harm.
It's like someone who's codependent saying like I need to heal on my own.
Yeah, I guess so. It's someone that it's like your AA sponsor telling you to just tough it out. And don't call me too much.
Right.
But it's more important. There's probably a better comparison that we can draw.
It's a weird comparison you made.
Yeah. Well, when you said codependent, I thought that's what you were talking about.
No. I just meant like, you're like so tied to somebody and you're like, you know what? I need to do this for myself now.
No, it's more nuanced. Because what Tiff Macklin is saying is that he doesn't want to reduce the interest rate because it will stoke inflation and not help the economy pivot. And the pivoting of the economy has to be done by corporations and government now.
Right.
But Warsh, who's Trump's pick for the Federal Reserve, is basically saying the opposite, which is where this gets really interesting. Tiff Macklin is saying it's not the position for the Bank of Canada to step in right now and lower interest rates because the Canadian businesses have to pivot on themselves without the reliance on lower interest rates.
Right.
And we have to start using AI, and we have to gain productivity in the AI space but we have to be doing these things. And if we reduce interest rates, it's only going to create inflation. Kevin Warsh, very, very smart guy. So like we can beat up Trump's nominee all we want for chairman of the Federal Reserve. But the one thing he is not is dumb.
Right.
So he worked for Stanley Druckenmiller, who is like one of the most successful hedge fund managers of all time. And he was in private equity under him. So he understands Silicon Valley. He understands companies at the grassroots level that are engaged at the forefront of artificial intelligence. He's invested in them. He knows how quickly this AI boom will come to us, how the enhanced productivity of the workforce, how quickly that will come. And he takes a totally different position. He says it's the position now of the Federal Reserve to decrease interest rates to allow businesses to invest more heavily in artificial intelligence, thereby making them more productive. The more productive an economy gets, the less inflation becomes a factor.
Right.
If your economy is productive, it means that your companies are producing more with less labor reliance.
Right.
It means that profit margins are increasing because you're becoming more efficient at pushing out goods and services. It means that you have more abundant goods and services in the marketplace. All of these things lead to less scarcity and decreased inflation. So, and this is not the first time any central bank governor has ever said this. In the mid 90s, early 90s, Alan Greenspan took the same position very successfully. And he said, you know what? We're not going to increase interest rates. We're going to leave rates low to allow businesses to borrow money so that we can be at the forefront of the internet. And the internet will make us more productive. And by making us more productive, it will have the effect of reducing inflation in and of itself.
Right. Which worked.
And it worked.
Yeah.
Kevin Warsh is saying the same thing, and he's citing Greenspan. Kevin Warsh is not a dumb guy. I'm not saying that Tiff Macklin's a dumb guy.
Yeah. I'm thinking.
I'm just saying, like, there's two schools of thought here, right?
Right.
One school of thought is you want your businesses to pivot in a new direction. In order for businesses to pivot in a new direction, they probably need to borrow money to do it. The cheaper the money becomes, the more effective they can pivot. The less costly it is, the more investment that they can make. The United States is taking a position, and they're saying we want to set the stage for our corporations to be the most successful corporations in the world and allow them to pivot quickly to win the AI race, to make our country more productive, thereby lowering the risk of inflation. What Canada is saying is we know we have a massive problem with trade protectionism. We know we have to pivot, not only pivot to new trading partners, but pivot to become at the forefront of AI. And the way we're going to do it is we're going to white knuckle it. We're not going to give lower interest rates to the companies that we know so desperately need to make this pivot. We're going to leave them to their own devices, and we're going to rely on the same thing Justin Trudeau relied on when he went into trade negotiations with Donald Trump: hope. We're going to hope that they could do it. Now, I'm sure that Carney, who's a smart guy, probably has a lot planned. We even have a minister of artificial intelligence. I really love if I was going to bet on one or the other, I bet on the United States right now.
I mean, I was going to say, it sounds like you're siding with the United States on this one.
It makes a lot of sense to me. And obviously, I like low interest rates, and the property market's in the toilet, and it would help a lot of our customers.
Yeah.
But I think another 50 basis points is not going to stoke the property market in Canada anymore. But it will help people who have mortgages breathe a little bit.
Yeah.
And it will reduce the chokehold that interest rates have had on our economy for quite some time now. I just think that, I was just in China.
Right.
Okay. And when you first get to China, to mainland China, you notice that they have their own app for everything. There's no Uber, and there's no WhatsApp, and you pay with everything with like Alibaba or WeChat.
Yeah, yeah.
It's like you scan, either you have a QR code and they scan it, or they have a QR code and you scan their QR code, and the money just, it's in the ether.
Yeah, it just goes.
And you use DD to get a car, but these are all Chinese companies. And initially you're kind of annoyed, like you're downloading all these apps and like you kind of have to prep for it in advance. So you got to like, passport pictures and, like your credit card's getting linked or however you plan on using these apps. But when you're there and you're using it, you realize how smart it is. Because they, unlike Canada, are not allowing the most critical and major facets of their economy to be serviced by American companies who are just ripping all of that profitability out of the country and siloing it in some Irish domiciled corporation, not being taxed in China. They supported the companies, they nurtured them, they created barriers to entry like tariffs, and they keep the tax revenue there. Listen, that's protectionism, right? Like, it's not ideal in a world that we lived in 5 years ago, but in a world that we're moving into, it's pretty
World of Donald Trump.
ideal.
Yeah, yeah.
And I'm sure we'd have more tariffs if we siloed certain parts of our economy. I think the problem with Canada is actually more severe because the people that created these technologies, like Uber, Canadian guy.
Yeah.
Yeah, my buddy.
Yeah.
But like the people that create a lot of these great technologies, they're nurtured in Canada. They're educated in Canada. They begin building their businesses in Canada in some cases. And at a certain point, they just realize that the regulatory environment in Canada is not conducive to running one of these businesses.
Yeah.
And they're gone.
Yeah.
And what we're learning now is that it's not just the regulatory environment that's not conducive to it. It's also the central bank.
Right.
It's also the Bank of Canada that says, let them
Figure it
go
out.
it on their own.
Figure it out.
Anyways, for this episode, you have to decide who you think is going to be correct. Warsh, the future governor of the Federal Reserve, governor of the Federal Reserve, chairman of the Federal Reserve, or Tiffy, the governor of the Bank of Canada.
Obviously, you think the Eastern European guy.
That reminds me of that joke.
What?
If you're Russian when you're going into the bathroom and you're rushing when you're coming out of the bathroom, what are you while you're in the bathroom?
I have no clue.
European.